$2 billion, on time, on budget, and set to revolutionize the future of Western Australia's oldest iron ore hub. The Western Range project isn't just another mine opening, it's a statement that the Pilbara isn't going anywhere. A partnership that's redefining how mining companies work with traditional owners, and a massive bet on Australia's iron ore future at a time when everyone is questioning what comes next. But here's what makes this story absolutely fascinating. While analysts debate China's slowing property market and new supply from Guinea threatens to flood global markets, Rio Tinto and China's largest steelmaker just committed $2 billion to sustain a mining hub that's been operating since 1972. What do they know that the doomsayers don't? The numbers tell an incredible story. 25 million tons of iron ore per year. An 18-kilometer conveyor system snaking across the rugged Pilbara landscape, 880 jobs secured for the next 2 decades, and, this is the part that should make every Australian sit up and pay attention, this project represents a fundamental shift in how the mining industry operates on Indigenous land. Let's start with the basics, because Western Range isn't just impressive, it's a masterclass in strategic mining development. The project officially opened in June 2025, marking the culmination of a journey that began with the joint venture agreement signed back in 2022 between Rio Tinto and China Baowu Steel Group. The ownership structure? 54% Rio Tinto, 46% Baowu. That 46% stake from China's biggest steelmaker isn't just an investment, it's a direct pipeline ensuring Baowu gets consistent access to Rio's world-class Pilbara blend iron ore. Construction kicked off in early 2023, and here's where Rio Tinto deserves serious credit. They delivered this massive project exactly on schedule and exactly on budget. In an industry where cost overruns and delays are practically expected, that's extraordinary. First ore rolled through the Western Range system in late March 2025, and by June, the mine was officially operational. But what exactly did $2 billion buy? The infrastructure is genuinely impressive. The centerpiece is a state-of-the-art primary crusher that processes raw ore right at the mine site. From there, an 18-kilometer conveyor system, that's nearly 12 miles of continuous conveyor belt, transports the crushed ore directly to the existing Pilbara processing plant. Think about the engineering required to build that across the Pilbara's challenging terrain. Deep gorges, extreme temperatures, cyclone-prone weather. This wasn't just laying down a conveyor in flat desert. The genius of this design is integration. Rather than building an entirely new processing facility, Western Range connects seamlessly to Pilbara's existing infrastructure. This isn't just cost-effective, it's brilliant strategic planning. The Pilbara hub has been processing iron ore since 1972, and Western Range gives it a new 20-year lease on life. Now, let's talk about why this project matters so much for Western Australia's economy. The state's iron ore industry generated a staggering $136 billion in export earnings during 2023-24. That's not a typo, $136 billion. And royalties from iron ore contributed $11.2 billion to the Western Australian government in 2024 alone. These numbers fund schools, hospitals, roads, and essential services across the entire state. Western Range produces up to 25 million tons of iron ore annually. At current market prices hovering around $90 to $100 per ton, that represents billions in ongoing export value. But more importantly, it provides certainty. 880 workers, both residential employees living in Pilbara and FIFO workers, now have secure employment for the next 2 decades. In regional Australia, that kind of employment stability is absolutely crucial. And here's something that often gets overlooked. Every mining job supports approximately 3 additional positions throughout the economy. Logistics, equipment suppliers, services, retail. The ripple effects extend far beyond the mine gate. Western Australian Premier Roger Cook emphasized this at the opening ceremony, stating that the project's importance to the state's economy cannot be overstated. But Western Range represents something even more significant than jobs and revenue. It marks a genuine turning point in how mining companies engage with traditional owners. This is Rio Tinto's first project to implement a co-designed social, cultural, and heritage management plan with the Yinhawangka people. Let that sink in for a moment. Not a plan developed by Rio Tinto for traditional owners, but a plan designed together with traditional owners as equal partners. This approach emerged directly from the Juukan Gorge controversy in 2020, when Rio Tinto destroyed culturally significant ancient rock shelters in the Pilbara. That incident sparked international outrage, executive resignations, and fundamental questions about corporate responsibility. The Western Range project shows how seriously Rio Tinto has taken those lessons. Yinhawangka Aboriginal Corporation Board Chairwoman Robin Hayden spoke powerfully at the mine's opening. She stated that for Yinhawangka people, country is everything. It holds their spirit, their law, and their deep responsibility to protect what was passed down to them. The opening of Western Range, she explained, represents a shift in how their heritage is being recognized and respected. The co-designed plan includes specific protocols for joint decision-making on environmental matters and mine planning. It outlines protections for significant cultural and heritage values across the entire project area. Rio Tinto CEO Jakob Stausholm stated he was particularly proud of the partnership work done with the Yinhawangka people and that they would continue working closely together. This isn't just good public relations, it's establishing a new standard for the entire industry. Other mining companies operating in the Pilbara and across Australia are watching closely. Rio Tinto has also entered into a separate co-management agreement with the Pukyukunti Kurrama and Pinakura Aboriginal Corporation, covering all of Rio's iron ore operations on PKKP lands. These agreements grant traditional owners a stronger voice in managing their territories, with specific focus on safeguarding cultural heritage and the environment. Now, let's examine Western Range within Rio Tinto's broader Pilbara strategy, because this project doesn't exist in isolation. It's part of a massive investment program. Between 2025 and 2027, Rio Tinto plans to invest more than $13 billion across the Pilbara. That follows $8.5 billion invested during the previous 3 years, from 2022 to 2024. These aren't maintenance costs. This is aggressive expansion and replacement to sustain long-term production. Western Range is one of several critical replacement projects. In March 2025, Rio Tinto announced a $1.8 billion investment to develop Brockman Syncline 1. The Hope Downs 1 and West Angeles sustaining projects are progressing through approvals processes. Combined, these replacement projects support an annual capacity of approximately 130 million tons. Why the focus on replacements? Because Pilbara iron ore deposits don't last forever. Some of Rio's older mines are depleting, and without new deposits coming online, total production would decline. Western Range specifically replaces declining production from older areas within the Paraburdu hub, including the Eastern Range deposits where Rio Tinto and Baowu Steel first partnered way back in 2002. Rio Tinto is also advancing the pre-feasibility study for Rhodes Ridge, described as one of the world's largest and highest quality undeveloped iron ore deposits. The target? Initial capacity of up to 40 million tons per year by 2030. If that materializes, it would represent another enormous addition to Pilbara production. But here's where the story gets really interesting and perhaps controversial. This massive investment is happening at a time when iron ore markets face significant headwinds. China's property sector, traditionally responsible for about 40% of iron ore consumption, has been struggling since major developers like Evergrande collapsed in 2021. New home construction in China has fallen more than 20%. Domestic steel prices in China have dropped to multi-year lows. Meanwhile, competition is intensifying. The massive Simandou project in Guinea is set to begin exports and forecasted to produce 120 million tons annually by 2030. That's nearly equivalent to all of Rio's planned replacement projects combined. With supply increasing and Chinese demand uncertain, many analysts have predicted iron ore prices will fall significantly. The Australian government's Department of Industry forecasts benchmark iron ore prices dropping to around $76 per ton in coming years, down from approximately $100 now. That represents a potential $42 billion decline in Australia's iron ore export earnings over just 2 years. So why is Rio Tinto investing so heavily? What do they see that others might be missing? First, operational excellence and cost advantages. Rio Tinto's Pilbara operations maintain production costs around $17 per ton, among the lowest in the entire world. Even at $76 per ton, those operations remain hugely profitable. The Pilbara's proximity to Asian markets, established infrastructure, and proven reserves provide advantages that Guinea's Simandou simply cannot match in the near term. Second, quality matters. Rio Tinto's Pilbara blend is one of the world's premium iron ore products. As global steelmaking evolves towards lower carbon methods, demand for high-quality iron ore suitable for direct reduction processes is expected to increase. Australia's challenge will be adapting its ore to these new steelmaking technologies, but the fundamental quality advantage remains. Third, partnerships. China Baowu Steel Group isn't just a customer, they're a partner with significant skin in the game. Their 46% stake in Western Range, combined with the 13-year iron ore sales agreement covering 126.5 million tons, provides demand certainty that independent miners simply don't have. Baowu Group Chairman Hu Wangmeng stated that Western Range isn't just a strategic cornerstone in both companies' global resource layout, but a model of China-Australia economic cooperation. That relationship extends back to 2002 with the original Bao-Hai joint venture. Over 20 years of partnership creates trust and stability that transcends short-term market fluctuations. Fourth, Australia's geopolitical stability. Despite all the talk about diversifying away from Australian iron ore, China needs reliable suppliers. Australia provides that reliability: stable government, established infrastructure, minimal sovereign risk compared to many alternative sources. Even as China develops other suppliers, Australian iron ore will remain fundamental to their steel industry. Federal Resources Minister Madeleine King highlighted this at Western Range's opening, noting that the Pilbara is the engine room of the nation's economy, and projects like Western Range will keep that engine running for future generations of Australians. Let's examine the employment impact more closely, because 880 jobs tells only part of the story. During construction, Western Range supported approximately 1,600 jobs. That massive injection of work helped sustain construction companies, equipment suppliers, and service providers throughout the region. About $1 billion in contracts went to Western Australian businesses. Think about that economic multiplier effect. Local fabricators, earth-moving contractors, accommodation providers, transport companies all benefited from this project. In regional economies, that kind of spending creates lasting impacts far beyond the construction phase. Now, with operations underway, Western Range provides long-term employment stability for Pilbara. The town itself has deep roots in mining. It was established in 1972 specifically to support iron ore operations. Rio Tinto owns more than 2,700 houses across Pilbara towns, including Pilbara, which they lease to employees. The company operates power, water, and sewerage networks in Pilbara, Tom Price, Dampier, and Panawanica. This isn't just mining, it's integrated community support. Western Range's 20-year operational life means Paraburdu's future is secure. Schools remain viable, shops stay open, community infrastructure continues to be maintained. For families who've built lives in these remote communities, that certainty is absolutely priceless. The mix of residential and FIFO workers also matters. While FIFO has become standard in Australian mining, residential workforces create more stable communities. People who live in Paraburdu have deeper connections to the town and region. They coach junior sports teams, serve on community boards, volunteer with local organizations. That social fabric strengthens the entire Pilbara. Now, let's talk technology and innovation, because Western Range incorporates lessons from Rio's broader autonomous and digital mining programs. While specific automation details at Western Range haven't been extensively publicized, Rio's newer Pilbara operations increasingly feature autonomous haul trucks, automated rail systems, and integrated digital operations centers. The 18-kilometer conveyor system itself represents significant engineering. Conveyors offer advantages over traditional haul trucks: lower emissions, reduced fuel costs, minimal labor requirements, continuous operation. As the mining industry faces increasing pressure to decarbonize, technologies like long-distance conveyors become more attractive. Rio Tinto and Baowu have specifically emphasized their commitment to green, low-carbon development. Chairman Hu stated their joint efforts in this area have set new industry benchmarks. While iron ore mining itself will remain carbon-intensive, reducing emissions in processing and transport represents achievable near-term gains. The partnership with Baowu also positions both companies for the energy transition. Steel production must decarbonize, and that transformation will reshape iron ore demand. Projects like NeoSmelt, a collaboration between Rio Tinto, BHP, and BlueScope, aim to make Australia's lower-grade ore suitable for direct reduced iron using hydrogen. If successful, technologies like NeoSmelt could revolutionize Australian iron ore's competitive position. The alternative, watching global steel production shift toward higher-grade ores from competing suppliers, represents an existential threat to the Pilbara's long-term future. Fortescue Chairman Andrew Forrest has warned that without decarbonization, the Pilbara risks becoming a wasteland as the world moves away from high-carbon steel. Rio Tinto CEO Stausham addressed this directly at Western Range's opening, stating it's up to companies to ensure Pilbara ore remains relevant. Working in partnership with Baowu on decarbonizing the supply chain, he emphasized that finding the right solutions will ensure the Pilbara remains a source of iron ore for many decades to come. This brings us to a crucial question. What does Western Range's success mean for other Pilbara producers? The answer is complex. On one hand, Western Range demonstrates continued confidence in Australian iron ore. If Rio Tinto, one of the world's most sophisticated mining companies, is committing billions to new Pilbara capacity, that signals their analysis shows long-term viability. BHP and Fortescue are making similar investments. BHP is advancing projects across its Pilbara operations, despite capping total output at 305 million tons. Fortescue continues developing new deposits while also pivoting toward green hydrogen and energy. The collective message? Australia's major producers believe Pilbara iron ore has a sustainable future. However, the market remains intensely competitive. All three major producers, Rio, BHP, and Fortescue, faced production challenges in 2025 when 4 major cyclones struck Western Australia's iron ore region. These weather events caused significant operational disruptions, forcing companies to adjust annual guidance toward lower production targets. These cyclones highlighted ongoing operational risks. Climate change may increase cyclone frequency and intensity, creating additional challenges for Pilbara operations. The industry's resilience in recovering from such disruptions demonstrates operational sophistication, but weather remains an unpredictable variable. Pricing pressure also affects all producers. When iron ore prices fell more than 20% during 2024, becoming the worst performing industrial metal that year, every Australian producer felt the impact. BHP reported a 26% decline in underlying profit for FY 2025, its lowest in 5 years, primarily due to a 19% fall in average iron ore prices. Yet despite these challenges, Australian iron ore producers' stock values have actually climbed. Rio Tinto shares gained up to 3.6% following their Q3 2025 report, despite missing production targets. BHP and Fortescue each gained more than 2% in sympathy trading. This suggests investors are prioritizing long-term fundamentals over short-term disruptions. The broader economic context matters tremendously. Iron ore exports represent approximately 32% of Australia's total goods exports. Historically, a 10% change in iron ore prices correlates with roughly a 1.8% move in the Australian dollar exchange rate. Each $10 per ton increase in iron ore prices adds approximately 13 billion Australian dollars to annual export earnings. For Western Australia specifically, the state government collects a 7.5% royalty on iron ore when prices exceed $100 per ton. Below that threshold, the royalty rate is lower. This means government revenue is highly sensitive to price fluctuations. When prices are strong, state budgets benefit enormously. When prices fall, revenues decline sharply. That's why projects like Western Range matter so much for fiscal planning. Securing 25 million tons of annual production for the next 2 decades provides revenue certainty. Western Australia can plan infrastructure investments, social programs, and public services with greater confidence when major resource projects have secured operational futures. Let's examine the China relationship more deeply because it's absolutely central to understanding Western Range's significance. China imported approximately 61% of global seaborne iron ore from Australia in recent years. That's 656 million tons annually. Brazil supplies about 21%, with South Africa and other sources making up the remainder. This dependence creates both opportunities and vulnerabilities. For Australia, Chinese demand has driven unprecedented prosperity. The resources boom has funded budget surpluses, superannuation returns, and living standards improvements. For China, reliance on Australian iron ore creates supply chain concerns, especially given geopolitical tensions. China has actively worked to diversify its iron ore sources. The Simandou development in Guinea represents their most significant diversification effort. When operational, Simandou will supply substantial volumes of high-quality ore. However, developing Simandou has taken decades and required enormous investment. Even with Simandou online, China will still need Australian iron ore. The Western Range Partnership demonstrates continued commitment to the bilateral resources relationship. Prime Minister Bob Hawke's 1984 talks with Chinese Premier Zhao Ziyang led to China's first investment in the iron ore industry. General Secretary Hu Yaobang visited Paraburdoo in 1985. This long history of cooperation creates economic interdependence that transcends political tensions. Federal Resources Minister King specifically referenced this history at Western Range's opening, noting that mining has been at the heart of the Australia-China relationship since the Australian Gold Rush era. The trade, collaboration, and friendship it fosters make both nations stronger. Still, Australia cannot be complacent. A recent report from the Australian Strategic Policy Institute warns that if an iron ore glut emerges, Whether by Chinese government design or economic downturn, the commodity may join other Australian exports subject to Chinese economic coercion. Australia has already experienced Chinese trade restrictions on barley, wine, coal, and other products during periods of political tension. However, the report also highlights that reducing dependence on Australian iron ore comes at considerable cost to China. Australia is by far the cheapest and closest source of high-quality iron ore for Chinese steel mills. Geography, established infrastructure, and proven reliability make Australian iron ore extremely difficult to replace entirely. The Western Range joint venture structure itself provides some protection. With Baowu holding 46% ownership, they have direct financial interest in the project's success. This alignment of interests creates incentives to maintain stable operations, regardless of broader political tensions. Now, what about the environmental considerations? Iron ore mining creates significant environmental impacts: land disturbance, water usage, dust emissions, and biodiversity effects. The Pilbara's unique ecology includes rare flora and fauna adapted to harsh conditions. The Hamersley Range, where Western Range is located, contains approximately 80% of Australia's identified iron ore reserves. Rio Tinto's co-designed management plan with Yinhawangka traditional owners explicitly addresses environmental protection alongside cultural heritage. Traditional owners possess deep ecological knowledge accumulated over tens of thousands of years. Their involvement in environmental decision-making can lead to better outcomes than conventional Western scientific approaches alone. The 18-kilometer conveyor system generates lower emissions than equivalent haul truck operations. Conveyors consume electricity rather than diesel, and if that electricity comes from renewable sources, emissions decrease further. Rio Tinto operates 4 major power generation stations across the Pilbara, and there's increasing focus on integrating renewable energy into these systems. Water management is absolutely critical in the arid Pilbara. Mining operations require substantial water for ore processing and dust suppression. However, dewatering of mining pits can affect local groundwater systems. Balancing operational needs with environmental protection requires sophisticated monitoring and management. The rehabilitation of disturbed land represents another major challenge. Traditional mining practice often left scarred landscapes. Modern operations face requirements to rehabilitate mined areas, but in the Pilbara's harsh environment, successful rehabilitation is difficult. Native vegetation struggles to reestablish, and topsoil is often limited. Indigenous involvement in rehabilitation planning can improve outcomes. Traditional owners understand which plant species are most likely to thrive and which areas have particular ecological importance. The co-management approach pioneered at Western Range could lead to more effective rehabilitation strategies. Climate change adds another layer of complexity. The Pilbara already experiences extreme heat, and temperatures are projected to increase further. Water availability may decrease. Cyclone intensity could increase. These factors will affect both mining operations and rehabilitation success. Looking forward, what does the future hold for Western Range and the broader Pilbara? Several scenarios seem possible. In the optimistic case, Chinese steel demand stabilizes or even grows modestly. Infrastructure investment in emerging economies drives continued iron ore consumption. New steelmaking technologies successfully adapt to use Pilbara ore. Iron ore prices remain above $80 to $90 per ton. Western Range operates profitably for its full 20-year planned life, and Rio Tinto develops additional replacement projects to sustain production. In a moderate scenario, Chinese demand softens but doesn't collapse. Simandou and other new sources add supply, creating more competitive markets. Prices decline toward the $70 to $80 range. Australian producers maintain production but face tighter margins. Lower-cost operations like Western Range remain viable, while higher-cost marginal mines struggle. The industry consolidates around the most efficient producers. In a pessimistic scenario, Chinese steel demand falls sharply due to economic stagnation. New supply from multiple sources creates oversupply. Prices drop below $60 per ton. Only the very lowest cost operations remain profitable. Some Pilbara producers curtail production or close higher cost operations. Australia's iron ore export earnings decline substantially, creating budget pressures for Western Australia and the federal government. Which scenario materializes depends on factors largely beyond Australia's control. Chinese economic policy, global infrastructure investment, steel technology evolution, and geopolitical developments will all play crucial roles. However, projects like Western Range position Australian producers to compete effectively across various scenarios. The low production costs, around $17 per ton, provide a substantial buffer. Even at $60 per ton, operations like Western Range generate meaningful margins. The partnership with Baowu ensures a portion of production has a committed buyer. The quality of Pilbara blend provides advantages in various end uses. Rio Tinto's CEO emphasized these factors at the opening, ensuring Paraburdu's longevity, working in deep partnership with traditional owners, and providing Baowu with consistent Pilbara blend supply all contribute to long-term sustainability. For Western Australia, Western Range's implications extend beyond iron ore. The project demonstrates that with appropriate engagement models, mining and indigenous heritage protection can coexist. The co-designed management plan sets a template that other industries and regions might adopt. If successful, this approach could transform how major resource projects are developed across Australia. The economic benefits, employment, royalties, taxes, local procurement, remind us why resources remain fundamental to Western Australia's prosperity. Even as the state diversifies into renewable energy, lithium, critical minerals, and other sectors, iron ore continues providing the foundation. Western Range's 20-year operational life extends that foundation well into the 2040s. The project also highlights Australia's need to think strategically about resource dependence. While Chinese demand has driven extraordinary prosperity, over-reliance on any single customer creates vulnerability. Developing markets in India, Southeast Asia, and other regions would provide more balanced demand. However, no market currently approaches China's scale. Technological adaptation will be crucial. If global steel production shifts decisively toward direct reduced iron processes requiring higher-grade ore, Australia either must upgrade its ore or develop alternative value chains. The Neo Smelt project and similar research efforts deserve substantial support. The alternative, watching Australian iron ore become progressively less relevant, would be economically catastrophic for Western Australia. Western Range also demonstrates the value of long-term partnerships. Rio Tinto and Baowu's relationship extends back more than 20 years. That history creates trust and shared understanding that facilitates major investments like Western Range. As global markets become more volatile and uncertain, such partnerships may become increasingly valuable. The attention to indigenous engagement represents genuine progress. The Yukon Gorge disaster could have permanently damaged Rio Tinto's social license to operate. Instead, the company has worked to rebuild relationships and establish new engagement models. Whether this represents genuine cultural change or sophisticated corporate PR remains to be seen, The test will be how Rio Tinto operates across all its projects and how it responds when conflicts arise. For the Yinhawakong people, Western Range represents both opportunity and ongoing challenge. The economic benefits from the mine, employment, contracting opportunities, and cultural heritage funding can support community development. However, mining on country always involves trade-offs. Places of cultural significance may be affected, traditional access patterns change, and the landscape transforms. The co-designed management plan attempts to balance these competing interests. Its success will be measured not just at project opening, but throughout Western Range's operational life. Does joint decision-making function effectively when conflicts arise? Do protection measures adequately safeguard cultural values? Does the economic benefit flow equitably to community members? These questions matter far beyond Western Range. Australia has thousands of mining operations on or near indigenous land. Establishing effective co-management models could transform the relationship between the resources sector and traditional owners nationwide. Failure could entrench distrust and conflict. From a national perspective, Western Range reminds us of Australia's resource dependency. The project's $2 billion investment, 25 million ton annual production, and 20-year operational life all assume continued strong international demand for raw materials. Australia remains fundamentally a resources exporting nation. Some argue Australia should be doing more with these resources, processing iron ore domestically into steel or higher value products. However, the economics are challenging. Australian labor costs, energy prices, and distance from major markets make large-scale steel production difficult. While niche manufacturers and specialty steel producers can succeed, competing with Asian steel producers on commodity grades seems unrealistic. Perhaps the better approach is leveraging resource wealth to build capabilities in other areas. Sovereign wealth funds, research investments, infrastructure development, and education can create lasting benefits beyond the resources themselves. Norway's approach to oil wealth, banking substantial portions for future generations, offers one model. Western Australia's historical approach, spending royalties on current services, offers another. Neither approach is inherently superior, but conscious strategy matters. Simply assuming resource wealth will continue indefinitely risks leaving future generations without adequate alternatives when resources deplete or markets shift. Western Range also highlights Australia's infrastructure advantages. The 18-kilometer conveyor connecting to Parabordu's existing processing plant works because that infrastructure already exists. The Hammersley Railway line connecting Parabordu to port facilities at Dampier provides efficient ore transport. Port facilities can handle massive bulk carriers efficiently. This integrated infrastructure network represents decades of cumulative investment. Replicating it elsewhere, whether in Guinea, Brazil, or anywhere else, requires enormous capital and time. That infrastructure provides Australian producers with competitive advantages that aren't easily overcome. Maintaining and upgrading this infrastructure is crucial. Rio Tinto's $13 billion Pilbara investment program includes rail, port, and processing upgrades. As mines develop further from existing infrastructure, the economics of connecting new deposits become more challenging. Eventually, distance and terrain may limit economically viable development. Technology evolution may alter these calculations. Automated and autonomous systems reduce labor costs. Advanced processing techniques might allow economic recovery of lower-grade ores previously considered waste. Renewable energy could reduce operating costs while meeting decarbonization requirements. Rio Tinto has invested heavily in automation. Their autonomous truck fleet includes hundreds of vehicles operating across multiple Pilbara sites. The Auto Haul program operates autonomous trains. Operations centers in Perth allow remote monitoring and control of Pilbara operations. These technologies reduce costs while improving safety. However, automation also raises workforce questions. Fewer workers are needed per ton of production. While this improves economics, it reduces employment benefits for regional communities. The transition from residential to FIFO workforces, enabled by automation, has already transformed Pilbara towns. Some communities declined, while others adapted. Western Range's mix of residential and FIFO workers represents a balanced approach. Maintaining residential populations supports community viability. However, the trend across the industry favors FIFO operations. As automation advances, workforce requirements may decline further. These employment effects matter enormously for regional Australia. Mining has provided well-paid jobs for workers without university degrees. As automation reduces these opportunities, what alternatives exist? Tourism, services, and agriculture employ far fewer people at lower wages. The transition away from resources-dependent employment represents a major challenge for regional policy. Let's bring this back to the immediate implications of Western Range's opening. For Rio Tinto, the project validates their Pilbara strategy. On-time, on-budget delivery demonstrates execution capability. The partnership with Baowu secures a major customer relationship. The co-designed approach with traditional owners provides a template for future development. For Baowu, Western Range ensures dedicated supply of high-quality Pilbara blend ore. As China's largest steelmaker, supply security is crucial. The joint venture structure provides direct control and visibility. The 13-year offtake agreement, covering 126.5 million tons, provides long-term certainty. For Western Australia, the project sustains Parabordu for another generation. 880 jobs remain secure. Tax and royalty revenue continues flowing. Local businesses benefit from ongoing procurement. The state's iron ore industry maintains its global leadership position. For traditional owners, Western Range represents both progress and ongoing challenge. The co-designed management plan provides unprecedented involvement in project development. Cultural heritage receives explicit protection. Economic benefits flow to the community. However, mining on country always involves impacts that money cannot fully compensate. For Australia, Western Range demonstrates continued global competitiveness in iron ore. Despite predictions of decline, major producers are investing billions in sustaining production. The quality, cost advantages, and infrastructure of Pilbara operations remain world-class. Partnerships with major customers provide demand certainty. So, what's the final verdict? Is Rio Tinto's $2 billion Western Range project a brilliant strategic move or an expensive bet on a declining commodity? The answer is probably both. In the near term, the next 5 to 10 years, Western Range looks highly defensible. Production costs around $17 per ton provide enormous margins even at modest prices. The partnership with Baowu ensures a committed buyer for nearly half the production. The 25 million ton annual capacity meaningfully contributes to Rio's overall Pilbara output. In the medium term, 10 to 20 years, success depends on factors beyond Rio's control. Chinese steel demand, competition from new sources, steel technology evolution, and climate policy will all shape outcomes. However, Rio's low-cost position, infrastructure advantages, and quality ore provide competitive buffers. In the long term, beyond 20 years, the outlook becomes much less certain. Steel production may transform fundamentally. Direct reduced iron processes using hydrogen could reshape ore quality requirements. Chinese demand may decline structurally as their economy matures. Alternative materials might substitute for steel in some applications. However, betting against iron ore and steel seems unwise. Global infrastructure needs remain enormous. Emerging economies will require massive steel quantities for decades. Even with efficiency improvements and substitution, steel demand should remain robust. The question is whether Australian iron ore remains competitive in that future market. Western Range positions Rio Tinto to compete in various scenarios. If prices stay strong, the mine generates extraordinary profits. If prices decline moderately, low costs ensure continued profitability. Only in catastrophic scenarios, sustained prices below $40 to $50 per ton, would Western Range's economics become questionable. And at those prices, most global producers would also be uneconomic. The partnership with Baowu adds another layer of resilience. Even if spot markets weaken, the offtake agreement provides committed demand. This matters especially during price downturns, when securing buyers becomes challenging. The co-designed approach with traditional owners represents genuine innovation. Whether motivated by the Yukon Gorge controversy or genuine commitment to reconciliation, the outcome is meaningful progress. If this model proves successful and becomes industry standard, it could transform Australian mining's social license to operate. For investors, Western Range confirms Rio Tinto's confidence in Pilbara iron ore. The company is backing that confidence with enormous capital commitments. Shareholders betting on Rio are essentially betting on continued iron ore demand and the Pilbara's competitive position. For policymakers, Western Range highlights both opportunities and vulnerabilities. The project generates substantial economic benefits while creating dependence on global commodity markets beyond Australia's control. Diversifying the economy while maximizing resources sector contributions requires careful balancing. For the Australian public, Western Range reminds us of our resources endowment. The Pilbara's iron ore deposits have generated extraordinary wealth. How that wealth is used, consumed immediately versus invested for future generations, will shape Australia's long-term prosperity. $2 billion, 25 million tons annually, 20 years of operational life, 880 secure jobs, the first co-designed cultural heritage management plan. These aren't just statistics, they're the building blocks of Western Australia's future. Rio Tinto's Western Range project represents a massive commitment to the Pilbara's enduring importance. At a time when analysts question iron ore's future, Rio and Baowu are putting their money where their analysis leads. The project's success or failure over the coming decades will help answer one of Australia's most important economic questions. Can the resources boom be sustained, or are we witnessing its final chapter? The answer won't be known for years, but one thing is absolutely certain. Western Range has given the Pilbara, Paraburdoo, and Australia's iron ore industry a fighting chance to remain globally relevant well into the 2040s. In an uncertain world, that certainty has enormous value. And perhaps that's the most important message from Western Range's opening. The future belongs to those who prepare for it. Rio Tinto, Baowu, and the Yinhawangka people have jointly invested in that future. The next 2 decades will reveal whether their confidence was justified. But right now, today, Western Range stands as a powerful statement. The Pilbara isn't going anywhere. Australian iron ore remains world-class, and when companies and communities work together, extraordinary things become possible. The story of Western Range is still being written, but the opening chapter is undeniably impressive.